I've been watching markets for a long, long time, through cycles of boom and bust, through periods of euphoria and despair, and what I'm observing right now, particularly with the unfolding situation in Asia, feels different. It feels monumental. It's not just another blip on the radar. It's a seismic shift brewing, one that most in the Western world are either completely missing or deliberately ignoring. And I'm telling you, this isn't just about a potential upturn. This is about an entirely new paradigm that could very well trigger a breakout, the likes of which we haven't seen in decades, perhaps even in our lifetimes. Think about the global economic narrative we've been fed for so long. A Western-centric view where policies crafted in Washington or London dictate the rhythm of the world. But that narrative is crumbling, piece by piece, under the weight of accumulated debt, inflation, and a general erosion of trust in fiat currencies. Meanwhile, quietly, steadily, the East has been consolidating its position, building its wealth, and critically, accumulating real assets at an astonishing pace. The opening of Asia today isn't just about economies coming back online after a period of slower growth. It's about the unleashing of pent-up demand, a re-engagement with global trade on their terms, and a profound realignment of financial power that has the potential to absolutely shake the foundations of every single market we currently track. This isn't just a pivot, it's a full-blown revolution. For years, we've discussed the implications of global debt, of quantitative easing gone wild, of inflation being transitory until it demonstrably wasn't. We've seen asset bubbles inflate and deflate, and we've watched as traditional financial metrics have become increasingly detached from underlying economic realities. The average investor, and frankly, even many institutional players, are trying to navigate these treacherous waters using maps drawn for a different era. They're focused on interest rate hikes in the West, on the latest CPI print from the Bureau of Labor Statistics, or on earnings reports from Silicon Valley giants. And while those metrics certainly have their place, they are obscuring a far grander, more powerful force at play. The colossal economic engine of Asia, now preparing to truly flex its muscles. The problem, as I see it, is a pervasive myopia. Western analysts, by and large, continue to filter global events through a very narrow, self-referential lens. They assume that what happens in New York or Frankfurt will inevitably define the global economic landscape. But that assumption is becoming dangerously outdated. While we in the West have been preoccupied with trying to rein in inflation using the same old tools that seem less effective with each passing cycle, and simultaneously trying to paper over structural issues with ever more debt, Asia has been meticulously positioning itself. They've been growing their middle classes, expanding their industrial bases, fostering innovation, and perhaps most importantly, accumulating physical assets, particularly gold, at an unprecedented rate. This isn't just about trade balances. It's about a fundamental shift in economic philosophy and strategy. So how does this all translate into a breakout? What exactly will be the catalyst, and which markets will feel its impact most profoundly? And if Asia is indeed poised for such a significant resurgence, why isn't it screaming from every financial headline already? These are the questions that keep me up at night, and they're the questions I believe every serious investor should be asking. Because the implications are enormous, and they challenge almost everything we think we know about where true wealth and power are headed. This isn't a theoretical exercise. It's a tangible, observable phenomenon with real-world consequences playing out right now, and if you're not paying attention, you risk being left behind in a dramatic shift of global capital. Let's delve a bit deeper into this. When I talk about Asia's opening, I'm not just referring to the easing of pandemic restrictions, although that's certainly a part of it. I'm talking about a far more fundamental and long-term trajectory. Consider the sheer demographic weight of the region. Billions of people, many of whom are rapidly ascending into the middle class, driving demand for everything from consumer goods to infrastructure, and yes, to precious metals. They are building new cities, new trade routes, and new financial systems that increasingly bypass the traditional Western-dominated structures. The demand that emanates from this region isn't just cyclical, it's structural. It's an economic force unlike anything the world has seen before, fueled by a desire for improved living standards and a historical understanding of the importance of tangible wealth. And let's not forget the sheer velocity of capital flow. We've seen how quickly wealth can be created and deployed in these economies. The savings rates in many Asian nations are significantly higher than in the West, and a substantial portion of that capital is seeking safe haven assets that are perceived to hold their value independent of any single currency or government's fiscal policy. This inherent demand for real assets, particularly gold, is a critical component of the looming breakout. While Western central banks have been busy manipulating interest rates and expanding their balance sheets with digital entries, Asian central banks and sovereign wealth funds have been quietly, but consistently, accumulating physical gold. They understand something fundamental about the nature of money and wealth that many in the West seem to have forgotten. True wealth is not just paper promises, it is tangible and immutable. This brings me to a crucial point often overlooked in mainstream analysis. The West has become accustomed to a financial system where the dollar is king, and where monetary policy is largely dictated by a handful of institutions. But Asia is actively and increasingly seeking to diversify away from this dependence. The moves towards de-dollarization, the push for alternative trade currencies, and the establishment of new financial architectures all point to a deliberate strategy to build a more resilient and independent economic future. This isn't a sudden development. It's been a patient, multi-decade undertaking, and we are now reaching a critical inflection point where those efforts are beginning to bear fruit. The implications for the dollar's hegemony and for the valuation of assets tied to that system are profound, and frankly, deeply unsettling for those who haven't prepared. Now, if you're finding this perspective intriguing, if it challenges your current understanding of global finance, then I urge you to like this video and consider subscribing to the channel. We're going to be delving much deeper into these trends, and trust me, you won't want to miss what's coming next. Your engagement helps us bring these critical insights to a wider audience, and believe me, this information is becoming more vital by the day. The current geopolitical landscape further complicates and indeed accelerates these shifts. The increasing tensions, the fracturing of global supply chains, and the renewed emphasis on national security and self-sufficiency are all feeding into Asia's drive for autonomy and strength. They are not waiting for permission from the West to chart their own course. In fact, these external pressures are only solidifying their resolve to build robust, self-reliant economies that are less susceptible to external interference or punitive measures. This means a greater focus on domestic consumption, on regional trade blocs, and on securing essential resources, all of which will fuel economic activity within the Asian sphere and reduce their reliance on traditional Western partners. So, when I speak of a breakout, I'm referring to a confluence of these powerful forces: demographic growth, escalating wealth creation, a fundamental philosophical understanding of real assets, and a strategic decoupling from Western financial hegemony. These aren't isolated events. They are interconnected strands of a massive tapestry being woven, and the pattern is becoming clearer with each passing day. The sheer volume of capital, the concentrated demand for real assets, and the strategic imperative for independence are all building towards an explosive moment. This isn't just about a slight shift in market sentiment. It's about a fundamental reevaluation of value, of where capital truly finds safety and opportunity in an increasingly volatile world. The traditional indicators that many investors follow, the ones that are deeply embedded in Western financial models, are simply not equipped to fully grasp the magnitude of what's unfolding. They continue to analyze the world through a rearview mirror, missing the emerging landscape that is rapidly taking shape in the East. What we're witnessing is the culmination of decades of strategic planning and economic development in Asia, now poised to unleash a wave of growth and demand that could overwhelm existing supply chains and fundamentally reprice a vast array of assets. The gold market, for instance, which I've followed closely for decades, is particularly susceptible to these forces, as Asian demand has historically been a critical, often underestimated driver. The physical markets, distinct from the paper markets, are where the true pressure points are building. This isn't merely an academic exercise. It has very real, tangible implications for every investor, every saver, and indeed, every citizen. The global financial architecture is undergoing a profound transformation, and Asia is at the very heart of this change. The opening of these economies today is not just a return to normalcy, it is the ignition point for a much larger, more powerful engine that has been quietly humming in the background. It marks the beginning of a new chapter where the East will play an increasingly dominant role in shaping global economic outcomes, and its influence will reverberate across every asset class, every commodity, and every currency. The breakout I foresee isn't some distant possibility. It's an imminent reality, one that demands our immediate attention and a thorough reevaluation of our investment strategies. For those willing to look beyond the conventional narratives, the opportunities are immense, but for those who remain fixated on the past, the risks are equally profound. We've spoken about the tectonic plates shifting, but what if I told you those plates are now not just shifting, but colliding? And the ripple effect will touch every single one of your portfolios, potentially reshaping fortunes for decades to come. This isn't just about an economic recovery, it's about a foundational repricing of assets, a recalibration of global wealth, and for those positioned correctly, an opportunity that comes perhaps once in a generation. Remember our discussion on the vast untapped potential of Asian economies, the sheer scale of their populations, their burgeoning middle classes, and their increasing demand for tangible assets, real wealth, not just paper promises. The West, frankly, remains largely oblivious, clinging to narratives of fiat supremacy and endless quantitative easing. They see recovery. I see a desperate attempt to maintain an illusion of stability built on debt and printed money. The conflict isn't just East versus West, it's reality versus perception. And reality, my friends, always wins in the end. But what exactly will be the catalyst? Which assets will feel the heat first? And where does gold, silver, and the very bedrock of our economic system fit into this grand reordering? Let me tell you, what we are witnessing is not merely a cyclical upturn. This isn't just about China or India reopening their doors after a period of self-imposed restrictions. This is a profound, structural change in global capital flows, driven by a deeply ingrained desire for security and prosperity among billions. For too long, the narrative has been dictated by the West, by Washington, by London, by Wall Street. They printed, they spent, they manipulated interest rates, and the world largely followed suit, or at least absorbed the consequences. But Asia, particularly the giants like China and India, has been silently accumulating. They've been building infrastructure at a staggering pace, developing cutting-edge technologies, and, crucially, accumulating real assets. When I speak of a breakout, I'm talking about a moment when this underlying accumulation, this vast latent demand, suddenly bursts forth onto the global stage with undeniable force. Think about it, 1 billion plus people in China, another 1 billion plus in India, countless millions across Southeast Asia. These are not just numbers, these are individuals with aspirations, with savings, and with a growing distrust of paper currencies that can be devalued at the stroke of a central banker's pen. Their historical memory, their cultural reverence for tangible wealth, particularly gold, is a fundamental difference we often overlook in the West. We've been conditioned to believe in the almighty dollar, in the endless liquidity of government bonds. They have seen empires rise and fall, currencies come and go, but gold has always endured. So, when their economies fully open, when their populations are unleashed to spend, invest, and secure their wealth, where do you think that capital will flow? Not just into more domestic consumption, although that will be significant, but critically, into assets that are scarce, that are real, that cannot be conjured out of thin air. This is where the supply side comes into sharp focus, and frankly, it's a terrifying picture for those unprepared. Take copper, for instance. It's the lifeblood of electrification, of urbanization, of industrialization. Asia's demand for copper, for nickel, for lithium, for rare earths, it's insatiable, and it's only going to accelerate. Yet, new mines are not appearing overnight. The permitting process is arduous, the capital expenditure immense, and the lead times are measured in decades. We are facing a structural deficit in almost every major industrial metal, and Asia's reopening will expose that vulnerability in dramatic fashion. And then there's energy. Asia needs energy to fuel its growth, to power its factories, to light its homes. The push for green energy is admirable, but the transition is not instantaneous, nor is it cheap. Traditional energy sources, oil, gas, coal, will remain critical for the foreseeable future. And guess what? Supply is constrained there too, often deliberately so in the West, yet demand from the East shows no signs of abating. The price implications are obvious and profound. If you're gaining value from this discussion, please hit that like button and subscribe to the channel. Your support helps us bring these critical insights to more people who need to hear them. Now let's tie this back to the grand financial chessboard. The West has responded to every crisis with more money printing, more debt. We've collectively embraced a philosophy that believes endless fiscal and monetary stimulus can solve any problem. But what does that do to the purchasing power of your currency? It erodes it, relentlessly. And while the West might accept this slow, insidious theft of wealth, the East, having witnessed the consequences of unchecked fiat expansion throughout history, is far less willing to passively endure it. This brings us to the core of the breakout. The reopening of Asia acts as a monumental accelerator, igniting the fuse on an already volatile economic landscape. As Asian capital, freed from previous constraints and propelled by the very same inflationary pressures the West created, seeks refuge and growth, it will swamp the relatively small markets for real assets. We're talking about a scale of demand that existing supply chains simply cannot meet. This isn't a theoretical exercise. This is a clear mathematical equation of supply and demand, intensified by monetary debasement. So, as we navigate this unprecedented global transition, the question isn't if a breakout will occur, but when, and more importantly, what will you own when it does? The climax of this unfolding narrative, the breakout itself, won't be a gentle curve. It will be a vertical line, driven by the sheer, unyielding force of billions seeking real value, a force that the paper market simply cannot contain. Imagine gold not just at $3,000 or $5,000, but levels that today sound unfathomable, because the purchasing power of the currencies we use to measure it will be collapsing. This is where the loops close. The demand for tangible assets in Asia, coupled with the systemic inflation generated by Western central banks, creates the perfect storm for gold and silver. These are not just commodities, they are monetary metals, the ultimate store of value, the historical answer to fiat currency debasement. As the trillions of Asian capital, currently sitting in various forms, finds its way into these safe havens, the price discovery mechanism will be brutal for those betting on the status quo. Silver, with its dual role as both a monetary metal and a critical industrial metal for the very technologies Asia is building, will see an even more explosive move. This isn't a drill. This is the reality check the markets have been avoiding. The breakout will manifest as a dramatic repricing of all real assets against depreciating fiat currencies. We'll see agricultural commodities soar, energy prices spike, and the mining sector, starved of capital for years, finally come into its own. This is the moment where the global monetary system is re-evaluated by the collective actions of billions, not by a few central bankers behind closed doors. The confidence in the existing financial architecture will erode, and trust will shift to what is tangible and finite. This isn't theory. It's unfolding before our eyes. The greatest wealth transfer in history is accelerating, and the astute investor will be on the right side of it, holding assets that cannot be printed into oblivion. Educate yourself, position wisely. Your financial sovereignty depends on it. Explore the resources we provide, dive deeper into the data, and make informed decisions. We're here to help guide you through these turbulent but ultimately opportunity-rich waters. Don't forget to subscribe for more insights like this and leave your thoughts in the comments below. Let's navigate this together.